Okay, the biggest problem with most ADU financing is that it doesn't give you credit for the future value of the ADU or the potential rental income until now. There's a statewide solution that will help some homeowners use the future value of their ADUs to qualify. It's not the same terms as the Redwood Credit Union loan we covered last year. The big difference here is it's not limited to the North Bay. It's a California-wide solution, and it's not structured the same way as the draws and inspections of that RCU loan. The company is called RenoFi, and their solution is helping so many of the homeowners in our audience. They've become one of the primary sponsors. Thank you. So I've got Madeline Schmidt on the show today to talk about some of the questions everybody has. You can book a free meeting with Madeline and her team at RenoFi using the link in the description below the video. That'll bring you to a specialized team that knows all the ins and outs of the ADU program and California lending. I will try to answer as many of the common questions in this video as possible, talking to Madeline. And then for more information about your specific situation, you just got to book a call, start shopping around. Hi, Madeline.
Hey, Ryan. Thanks for having me on.
Thank you so much for coming on. Let's start off right at the beginning. I think a lot of homeowners have been using RenoFi and have been telling me about it. And their story, it's usually that you guys can somehow offer them a lot more lending power. Can you just explain how you do that?
Yeah, absolutely. So RenoFi, we have our secret sauce, we like to call it, our renovation underwriting. So we actually work with multiple lenders. So we kind of want to be a one-stop shop for you for all your renovation needs. So because we can leverage on the after renovation value, our lenders can actually go up to 90% of loan to future value. RenoFi is working on the back end doing our renovation underwriting. So we are going to assess the project, help with the appraisal process, and we're going to assure for you, the homeowner, and also for our lending partner that that project is adding value back to the property.
Okay, so let's break down. There's a couple things in there. Why don't other lenders go up to 90% of the LTV?
The reason they don't go to 90% is there's just higher risk. The reason RenoFi lenders will go up to 90% is because we are offsetting that risk.
Okay. Do you want to talk about how you offset the risk and the secret sauce, or is that all like proprietary?
No, we can definitely dive into that a bit. So we're really going to do what we call our feasibility and due diligence review. Due diligence means we're going to just confirm that anybody working on the project is licensed and insured. Our feasibility review is actually built to protect you, the homeowner, and to protect our lender. So we're going to make sure that your renovation plans and costs are not being overcharged, not being overestimated. There's no hidden fees in there, and that your project, based on the budget and the size, makes sense.
Yeah, all right. So I'll try to put it in normal English, and you tell me if I'm wrong, or guide me a little bit. So like if I go to a bank, the same bank that I have my mortgage at a lot of the time is what homeowners start with, right? And they say, well, Ryan, you already you like owe us 80% of the value of the whole house. That's that 80% LTV that you're talking about, loan to value. And
Yep.
then and they're saying that's too risky. That's too risky for us to give you even more money because you don't have much house left to secure the loan. What you guys are saying is you work with a lender to do some due diligence stuff, like extra research, extra steps, extra credibility. Maybe there's some money and like some security involved. And then by working through your process, some lenders who you've partnered with, they're willing to go like, oh, we could go up to 90% of the current home value or up to 90% of the future value. Which one is it?
So up to 90% of the future value will leverage. So you can actually tap into that future equity that your project's going to give you to get that project completed. We know that our homeowners are dedicated to completing the project and adding more value to the property, which serves as a lien. So it does benefit the credit union as a whole as well, because we're just adding more to their collateral.
That makes sense. Okay. So like again, put it in normal English. It's like a lot of the construction loans that you think of out there. It's people like borrowing 15 grand to redo their kitchen. And the kitchen's not adding, like the new kitchen isn't adding a ton of value compared to the old kitchen. So like they tend that tends to be hard, right? It's not like, but in an ADU, it's creating like a ton of value. And what how do you guys math out that value that it's creating?
Yeah, so the ADU, depending on what type of ADU, I mean, there's so many options with JADUs, detached, attached. Our sales experts dove into the ADU field, so they can definitely help guide you on that design phase. And that's actually what's going to impact that value. So if you think about the size, if you have a two-bedroom ADU, it's definitely going to add more value than maybe a loft style ADU. But everything's adding value to the property because you're adding living square feet, you're adding potential rental income, and you're adding more benefit to your community.
So you guys are even counting the rental income of the ADU into the future value.
Yes. So specifically for our California homeowners, we can leverage the future rental income. We can actually leverage up to 75% of the projected rental income.
That's huge because even though the federal lending regulations are opening up and they allow some, certain types of loans allow you to take the future value of the construction into account, I haven't heard of a conventional lending program that does the rental income without showing some time, like it's like a year or 3 years or sometimes like that, right? Of rental income like booked before they'll count it.
Yeah, no, that's normal for traditional lenders and traditional construction financing, but that's what makes RenoFi unique, is we just feel so confident about our homeowners and the project that even though you don't have a lease established, nothing in place, you just know you're gonna rent it out at some point in time. We will take a market assessment and see what other ADU providers in your area is offering for rental income and qualify that for you. And it does go towards your DTI, your debt to income ratio.
Oh, you're good. You don't use any acronyms. You're better than me. I'm always using the alphabet soup. What if you don't plan on renting out your ADU? You're not sure if it's going to be for grandma or maybe a rental. Do you guys still count that value?
So if you tell us at any point in time you could potentially use that ADU as a rental property, we can count the market rental income. If something happens and you choose not to rent it out and choose to let grandma move in, then that's your choice.
All right. So this is one of those sounds too good to be true kind of moments, right? Because you guys have unlocked a couple things, but all those regulations on the traditional lenders are there for a reason, right? We don't want people to lose their houses. We don't want people to decrease their housing security. What are the risks in, like you said, there's an extra lien all this language is a little mumbo jumbo sometimes, right? So what are the risks if somebody takes out this construction loan, both if they don't finish the project, and separately, once they do finish the project, what are the risks that working with RenoFi have that wouldn't exist with a traditional lender?
Definitely. So there is a lien in place. So our core product, our home equity product, is a home equity loan or a HELOC option. HELOC's pretty common in the market. So there is a lien place that goes behind the existing mortgage. If you choose to get a RenoFi loan based on the after renovation value and choose not to complete the renovation, you would have to return those funds because the loan terms, the interest rate, your monthly payment is dictated solely on that project being completed.
Okay. And then the payments back on the HELOC once the construction project's finished. What kind of rates are we seeing? Just I know it changes every week and based on credit score and stuff, but give me a couple examples of what people might expect if they come to you last week.
Yeah, so rates right now, I mean, rates are what they are. What's nice is there's no prepayment penalty for a loan type. So definitely look at the monthly payment, see if it's worth and it fits within your budget. Right now, we are seeing fixed rates kind of probably in the mid 8% range. Now, the HELOC option is going to be tied to prime. Prime today, I believe, is sitting at 7.75%. And then you'll have a small margin on top of that, depending on where that home value falls. But what's interesting, we've got multiple payment structures. So if you like fixed payment, no changes there, we can help you with that. Fixed rate, fixed monthly payment, fixed term. But if you like some versatility, we've got the line of credit, which is actually an interest only payment. So it can give you the lowest payment possible.
That's awesome. Let's say if you're saying the HELOC's kind of the most popular option right now, right? Yeah. So somebody goes in, they get a home equity line of credit based on the extra value that you guys have mathed out for them through your process and due diligence and gotten approved with this specialized lender. They're going to get a HELOC on that extra big value of the house plus ADU. Once they're done with the project, they're looking at a rate like what you just quoted. Some depends on when you contact RenoFi or your lender and all the details of your specific situation. But let's say they're coming in at like 7 something. Yeah. What you're saying is once you're done with the project, now the ADU is finished. Now you can go refi, and most traditional lenders will take into account the fact that it exists and they'll include it in their appraisal.
Yep, exactly. Because you've already increased that property value as a whole. So when mortgage rates start to go down, and mortgage rates are crawling back down, you'll have the opportunity to refinance and roll everything into one payment for yourself.
Yeah, that's okay. That makes a lot of sense. So in that way, it's a HELOC. It's a vehicle to complete the construction, which you can then hold that interest if that debt, if the interest rates are going the wrong way and whatever. Or if you're ever in a good position to refinance, now you have a lot of options. You could do it again with RenoFi, but you could also go across the whole gamut because you have a finished ADU. You've crossed that big chasm of like the uncertainty of the construction period. That makes a lot of sense. During that construction process, because it's a HELOC solution, I don't have to pull out all the money at once. Do I have to show that I'm finishing construction in different steps? Like, are there inspections or for draws and things like that?
No inspections, no draw phases, nothing like that. There is a final inspection. So RenoFi will regularly reach out to you just to make sure that the project is on track. But once you hit that 100% mark and the project's pretty much done, let RenoFi know and we will coordinate with the appraiser. So the original appraiser who went out and assessed that future value for us based on the renovation plans comes and does a final inspection. It's really just them checking some boxes, making sure that the plans that they reviewed was the full project completed.
Okay, I keep talking to homeowners who have not the ones who've used you, but I keep talking to homeowners who get an appraisal for their proposed ADU. And they're like in with a lender. They think everything's settled up. They get their appraiser comes out, and the appraiser's like, oh, the ADU is worth, pennies on the square foot sometimes. It's crazy. I see really crazy appraisal documents across my desk. How do you guys make sure you get realistic appraisals?
Great question. And I'm glad we're going through this, Ryan, because ADUs and appraisals in general have been new. And I think we're all learning as a whole in the industry. I think the best thing too is to set homeowner expectations, which our sales team will work with the homeowner through the process. We do need to be realistic when we're setting the initial value that we're offering those loan scenarios based off of. So I think going into the RenoFi process, just knowing that you may not get 100% of the cost of the ADU back into that property value is a good step. Appraisers like to see that the ADU looks relatively similar to the main home, kind of like a smaller version of it. They also like to see that it has its own entryway, exitway, things like that. So there are definitely ways that we can help you leverage higher returns on those investments. Definitely ask your renovation advisor.
Okay. And then, so it sounds like that means you've got guidance tips for design and actual planning and budgeting. And then separately, you also just kind of have a process for picking responsible appraisers. What I would ask then is like, if on a long enough timeline, you're going to get a weird appraisal come back. What do you do?
But we've got an appraisal desk team. They are dedicated to working with those external appraisers to get those reports completed.
And my understanding is like you guys, you don't just tell the appraiser like we're building 1,000 square foot ADU, like figure it out. You kind of have a scope of work or some detailed document. Can you describe what that process is like?
Yep. So I always suggest, as close to final plans as possible. And the reason I suggest that, especially in California with the permitting process, we want to know that the project is set. Because if we order an appraisal and the project changes, we would have to order a new appraisal for that updated scope. So definitely we want to have as much design finished as possible. And then for the appraiser, we'll need drawings, something visual of the project, blueprint style plans. It can be architectural plans. Those more in-depth ones do tend to give better insight for the appraiser, but it can even be detailed, what I call back of the napkin style drawings, as long as it has measurements and everything that an appraiser would need to assess that ADU. Because you got to remember, guys, the appraiser is going to go on site, but there's no ADU yet. So they need a good picture of what it's going to look like.
Got
They
it.
also like to
Put a
see your
little
process.
house there.
Yes, exactly.
Okay.
But also like a cost estimate as well. So if you're leaning towards those finer materials, especially focus on the countertops, cabinets, things like that, things that you've chosen to put in your ADU that make it unique, let the appraiser know. If you're leaning on those higher end costs, let the appraiser know. We want them to give you credit for the higher end materials instead of giving you credit for builder grade materials.
And so you have a way to convey that information or coach homeowners through the process so that like they get the appraisal that they want, hopefully.
Exactly. Yep. We've got our dedicated sales team. They are renovation experts. So leverage your sales associate and they will help you coach you along the way.
All right, cool. Who is this not for? So like if somebody comes through with an SB9 project where it's a second home or a lot split, I know that's a no-go. What other common stuff do you see that you're like, ooh, this isn't really the best option for that project?
So what's interesting, Ryan, our goal for 2023 is to kind of be a one-stop shop. So one thing we've taken on with additional partners is if RenoFi can't help, we're going to find someone who can help. We want to keep your project moving. So if RenoFi can't help, somebody will. So honestly, we should be able to help any homeowner that needs renovation financing.
Cool. So, like, again, link in the description below. Free to book a time. I like to get as many of my audience members through the RenoFi pipeline because if they don't have, if you don't have the right product for them, you'll just tell them, and sometimes you have a referral to another lender.
Yep, exactly. And guys, if you use Ryan's link, you'll get the support of me and my team. You'll get a streamlined process.
About just I'm gonna rattle through some options, and you can. It's fine to say, yeah, exactly. We will recommend somebody else who can do this, or that we do this ourselves. But it's also okay to say no, go somewhere else. So, what about manufactured housing?
So if the ADU is manufactured, we can assist as long as the primary structure is a site-built single-family home.
Okay. How about tiny homes on wheels?
So tiny homes, we can assist the tiny home if it's on a foundation. Tiny home on a wheel, we would refer you to a partner of ours.
Yeah. And park model RV, same thing.
Yep. So for RenoFi, our core products, if it can be removed by a trailer, it usually doesn't fit.
Yeah. Makes sense. Cool. Any other categories you want to hit just so that, otherwise you're going to get the calls.
Bring on the calls. We love them. One thing I like to mention, we can help with investment properties, not for our RenoFi core product, but we do have a competitive partner that can also offer after renovation value for an investment property. So that's very unique in today's market. And also we've got our personal loan option. So like I said, we try to make something work for every homeowner.
Yeah. Sounds good. If this comes up a lot, so I might as well address it. People say, why don't I just go to the lender directly? Is RenoFi acting like a middleman that I can just cut out here? Can you talk a bit about why they would or wouldn't do that?
Yeah, absolutely. So if you go to any of RenoFi's partnered lenders, they will turn you right back to RenoFi. So they can offer it based on current value and their more traditional products. But to leverage the after renovation value, you got to go through RenoFi because we are offsetting that risk for the lender.
Yeah. So I think that's a great place to just say, hey, lending options. This is one of the most important decisions people make in their whole lives because they're spending a bunch of money. They're taking out a big old loan. Shop around. RenoFi happens to be a really outstanding option because of this one cool trick, right? And so highly recommend you at least include RenoFi in your math when you're doing your product comparison. And if you're in the position where you own a house debt free, a lot of the time you might get an amazing rate going directly to a traditional lender. If you're even halfway debt free, you might be surprised because RenoFi, by counting all that extra value, brings that percentage of debt right down. And so if you're getting something based off prime, maybe you're getting an even better rate just by counting the future value, not because you're borrowing more money.
Yep.
And then on top of that, if you're right at the edge, which a lot of us are, to do a $200,000, $300,000 ADU, you need more access to equity. Then RenoFi does that with the same trick. And so that's a great kind of summary. You've answered a lot of the questions I've been kind of knocking around with. So that's super helpful. And thank you so much. Is there anything you want people to know before booking that appointment?
Just know that we strive to be the renovation experts. So we're here to help. We're here to make your renovation as painless as possible. We want to help with the financing, but we want to help with the whole project. So if you need help with design, if you need help with an ADU partner, just let us know.
Cool. I think my personal, if you've got questions that we didn't answer in this video, pop them in the comments because I have a direct line with Madeline and the team over there. I'll do follow-up videos where we answer your specific questions. We could do shorts if it's easy, and we'll do another long one if I just totally missed the mark on some of these questions. Madeline, you up for that?
I'm up for it. Let's do it.
Cool. All right. You can watch more videos about RenoFi and the services that they offer in this playlist. And you can check out more things about ADU cost and financing in this playlist over here. Thank you for watching. Let's build some housing.